Hi, in this video we will see the foundation of an accounting system, which is recording transactions. On every company there will be a whole set of accounts which can be represented by this T shape. So there will be accounts for every single thing. There will be accounts for assets, for capital, for debt, for revenues and expenses. All these accounts may be affected by each transaction or event. So every time there will be a transaction, there will be some changes on at least a couple of these accounts. And these changes are done through a double entry registry. And on different accounts, there will be debits and credits. The debit will be on the left-hand side of the account, credits will be on the right-hand side of the account. Whatever transaction there is, debits and credits must match. Let's take a look at one example. Imagine you acquire one new machine and you pay with cash and it costs 1,000 euros. This transaction will have an impact in two accounts, cash and equipment. Cash will decrease. Since you are using cash, you will have less cash in the company, and this is done by crediting one account, which is a cash account. On the other hand, you will have a higher value in equipment, so the equipment value will increase. This is done by registering a debit in that account, in the equipment account. At the end, what you have to guarantee is that the debit side matches the credit side. Now let's look at the same acquisition but with a different payment type. This will imply a more complex registry. Instead of acquiring this machine with only cash, let's imagine you acquired the same machine with 50% cash and 50% will be paid in one semester. This here will be registered in a different way. The equipment will increase by the same 1,000, so the debit side will be exactly the same. What changes is the credit side. Instead of crediting 1,000 in cash, only 500 will be credited in cash and the remaining 500 will be credited in payables account. So here we are turning this into a more complex situation. So not in every case you will have only two accounts changing. Several accounts may change. This is a wide and complex topic, and that's why it is done by certified accountants. Even the examples we saw were oversimplified because we didn't take a look at value-added taxes, for example. Our focus is not on the accounting process. We are more concerned on the outcome of this process and how we can use this to support our decisions as managers. And that's what we are going to see in the next classes.